Hello traders, this is Blake Morrow with ForexAnalytix and you're listening to the week ahead video for September 27, 2020. I want to welcome you guys and gals. Now I have a special video for you today. Grega Horvat is going to be providing the analysis this week for the week ahead video, so that's very exciting for you. But this has been an exciting weekend for us. If you are not aware, we are conducting the Traders Summit event right now, and we're in the midst of it. We're kind of in the middle of it right now, and that's why Greg is going to take over the video for this week, give you a technical update of the FX and equity markets. But before I turn it over to him, I did need to mention a couple of things. If you have not taken advantage of our seasonal offer, this offer only comes around maybe a couple times a year, and we have it live right now. It's 12 months for the price of 7, 6 months for the price of 4, or buy 1 month, get 1 month free. So take advantage of this pricing before it goes away at the end of this month, which is like in a couple of days. So make sure you take advantage of the seasonal offer that we have. And then also make sure, if you guys haven't done so and you're not attending the Traders Summit, make sure you register today so you can at least get the recordings if you missed it live. So just go to traderssummit.net. And I want to thank all of you that are in there listening and have been since Friday. It's been such a great event. We've had so many great speakers, and we've got more to come tomorrow. I'm excited for the great Jack Schwager of the Market Wizards book series, on top of Ashraf Ladi, Chris Weston from Pepperstone Securities. So many great speakers are coming up tomorrow, so make sure you guys are listening in. So I'm going to turn it over to Grega Horvat. Thank you guys for the support, and I'll be talking to you on the F.A.C.E webinar on Monday.
Hello traders, hello everyone. My name is Grega Horvat and welcome to our new week ahead video. So today I will cover the markets for the upcoming week. As you know, we have launched special event, a 3-day event, Trader Summit, from this Friday to Sunday. So the team is busy, Blake is busy, that's why I'm taking the care of the week ahead video. So we will look at the markets mostly from the Elliott wave perspective. As you know, the Elliott wave perspective is based on market sentiment, crowd psychology, especially on a higher degree, cycles. But I also love this analysis because it's not just based on sentiment, but also technical analysis. So it's actually a combination of both. And that's why I really believe in this theory, and I'm always excited whenever I go through the charts and share them with you. So firstly, let's take a look at the euro dollar. Now, euro dollar has made some very big retracement here up from March lows, and the question is if this is ongoing impulse or maybe some kind of a sharp correction. Let's not forget that still here, as you can see here on daily chart, the higher degree drop here from 2018 highs was a very strong one. So this can be a corrective bounce. The only question is what kind of a structure this corrective bounce can form. Well, it can be, as you can see also here, it can be still wave A of a higher degree ABC recovery, or maybe we are already in late stages of this sharp rise. However, I really love to put trades that are more short term, like maybe lasting for around 5 days, maybe to even 2 weeks. So I try to focus on what is going on right now. And if we look back from March lows here, clearly the trend is still up. Okay, and also we have only 3 waves down from the highs. So saying that we are already topping here and we are going back to the lows, it will be too soon, okay, because both of the wave counts are still valid. The first suggests that we will see another rise, maybe up for a wave C and then a drop, while the second wave count, if is this an impulse, then this is now wave 4 and you will see a push higher into wave 5. Okay, and what is really significant and important here is that here wave 4 has this trend line support, and also you have even here, if you look back, you have here this horizontal support, okay, these previous swing highs. So as long as we are trading in this zone, okay, where potential bounce could occur, I think that we should be very careful. Also, if we look at the 4-hour chart, you have now current third leg drop, which can be wave C at equality level compared to the first leg measured from wave B high. So it's again very tricky to say that market is going straight to the downside. Let the market decide whenever it wants to go. I'm just now observing from a distance and really curious what will happen next. But I know that if we see a rally back above this trend line, then I will be bullish. If we see a continuation lower, then I will have to respect the current price activity and will maybe even have to switch to some bearish alternate counts. Okay. But still, I think that there is a lot of issues in Europe. I mean, coronavirus is still spreading, and if cases will just continue to rise, then of course this will be a very tough situation for the euro in general. But on the other hand, we have the US elections that will also be very volatile for the US dollar. So we are definitely stepping into some very interesting period here for this pair. Now let's take a look on cable. Now cable is coming lower, and as you can see, it's coming down very aggressively here below this trend line support. Okay, and this happened after this ABC recovery, only 3 waves of recovery. The next important thing, not only this breakout, is also this overlap with this previous swing high, because this overlap actually invalidated the possibility of a bullish impulse. Okay, so in my opinion, we could go much lower here on cable, but maybe we still should be aware of potential corrective rallies here on this pair. Now, the ideal resistance would be at 1.30 psychological level, and I would probably be looking for move back into this zone if we see this falling trend line connected from latest August highs broken. If this is broken, then I would be looking for wave B or maybe even wave 2 to be a flat correction. And as I said, this 1.3 psychological level would then be again as a very important resistance. If we just continue straight to the downside next week and this trend line is not breached, then we are already moving lower into wave 3 possibly. Okay. Now let's take a look on ASI. Now ASI, in my opinion, here on the weekly chart is signaling that we are stepping to a new recovery phase. Now, even if this would be only a 3-wave recovery, only a corrective recovery, you still need a 3-wave movement. Now, this first leg appears to be very aggressive and looks like it's an impulse. So what I'm looking at here is actually 2 possibilities. Now, the first is that this impulse is still underway and you're now in a wave 4, moving back into these very nice support levels, the previous highs here, that can be as a nice support here. And then you have also the 38.2%. So this is a very nice zone that comes in actually around perfect psychological level, 0.7. So if we see a bounce here next week, then watch out for more upside. If market will slip through these supports and we do not see any signs of reversal to the back to the bullish trend, then obviously I would be looking for a deeper correction, but possibly, if I hide this, but possibly we'll be looking for an ABC deeper retracement, maybe back towards these levels around there, 0.67 or 6,750 around there before we continue to the upside. But the important thing is that no matter how I look at it on ASI, I think that this is temporary setback and that we could resume back higher again when and if obviously the stock market will turn back to risk on sentiment. Now looking at the 4-hour chart here, we can be completing these 5 waves down here, either for wave C or maybe even wave 3. So as I said, 0.7 is very important level. Let's see if we can rally away from there. If that would be in 5 waves, then we will know that, and we will have a confirmation that dollar is going lower again and ASI back towards the highs. If rally would be only slow, temporary and limited at any previous swing highs, then of course this will be a signal that bears are still strong here. Now let's take a look on dollar CAD. Now dollar CAD is trapped in a very big consolidation here, since we here reversed from the upper side of the range. So it looks like that we are now in the middle of this range, where a lot of tricky price action could unfold. We also found some support here at this channel. So I think that we are now in a corrective temporary rise, and that we will see eventually more weakness, either into wave C as part of a triangle, or maybe even a flat. Okay, so looking at the daily chart here, what is going on? Well, I see now market in another corrective recovery. Ideally, that's a wave 4, and wave 4 is now moving into very nice resistance here. We have the 38.2%, not so far away, and then you have another important zone here at the area of a former wave 4 termination zone, where higher degree wave 4 could actually once again see limited upside. And I will be expecting more weakness here, especially if crude oil will be looking for support. Let's not forget that we see crude oil in a corrective setback. It's still ongoing, but I think that could be very, very interesting once we have there also completed free wave drop. And looking at the 4-hour chart on dollar CAD here, well, if you will try to count this as a bullish impulse, you will have a lot of issues here because of overlaps. So your wave count would be invalidated based on Elliott wave rules. So I'm looking for a 7th-week correction still in progress. ABC, X, and another ABC can now be unfolding. So maybe after this wave B, watch for potential support here at 1.3 to 85, 1.3 to 60, and then a final push higher here into this 38.2%, as I said, important fib level. So up there, I will pay attention very closely to stock market in general, to the crude oil. If we see those reversing to risk on mode, then and at the same time dollar CAD is turning down, then I think this could be very, very interesting for more weakness. Now here I'm also observing this MACD is moving here into zero line, potential temporary new reversal zone. Also, I would pay attention to this is 100 moving average here on the daily chart, and there you have 200 moving average as well. So this zone I think can be very, very important as well for potential new reversal to the downside. Now let's take a look also on dollar Swiss. Now dollar Swiss is recovering, but again only with 3 waves so far. You can see here very nicely on the 4-hour chart, very clear potential ABC recovery. We are now at a key zone. So here important is confirmation. Is my wave count correct or no? Well, again, this will be decided by the market. So I have to see 5-wave drop to confirm that I'm on the right track. So for now, I'm just observing it, and let's see if maybe if suddenly this market just explodes to the upside, then clearly we will have enough of evidence. If we see, let's say, market rising back towards 9.4 level, then we will have enough of evidence to say that this was wave 1, this was actually sharp wave 2, and you are now in new extended wave 3, meaning that market could actually then be bottoming here. So it's a very tricky situation at the moment, because we are moving into some important zone, and also stocks, as I mentioned several times, are very important for dollar in general, and even there we have some very interesting levels that I will cover in the second. Now let's take a look also on dollar index. Now dollar index was able to find some support here at this trend line, and maybe we are now recovering only temporary away from it. So we will see what will happen up there. I think that the most important is just to keep the simple, to keep the charts simple as possible. You have still here downtrend, no doubt. We have seen significant break below the previous supports, and now we are rallying so far only with 3 waves back to this trend line resistance. So maybe here is a new potential reversal zone. So again, it will be decision made by the market. If we will see a reversal, then I will aggressively turn bearish on US dollar. If we see a breakout here, then I will look for at least 3 wave recovery back into this zone probably. Okay, so I think that next week could be again very, very interesting and will tell us a lot about the dollar and the risk on or risk of trade for even weeks ahead. Now let's take a look on gold. Now gold here on a weekly chart, clearly bullish. There is no reason to fight this trend because I do not see completed 5-wave rise here up from 2015 lows. We also moved to new all-time highs, so definitely we have to respect what the market is doing, and ideally we are now just making a new corrective setback. This could be a wave 4 here. Why? Because we also have spotted this triangle in the middle of this pullback. This was a very sharp drop, then you have a contracting range, and now another sharp drop is unfolding. And usually wave C will be equal to wave A, either measured from end of a wave E of B, which was here, or measured from this highest point of a subwave of a wave B. Okay, so in both cases, I think that this is a very interesting zone here at 1750 up to 1800. Let's see what happens down there. But again, if we see a bounce, I think that this could be very interesting. There you have on the 4-hour chart some fib levels that I think are very, very important. Now here we have also this daily chart. Again, just a poor technical analysis here. We are here in uptrend. Okay, and all of a sudden we made a pullback. We have seen a pullback on the daily chart back to this 100 moving average, and all of a sudden this happened, the market then formed a base and rallied. Okay, so maybe we will now see something similar. Okay, this even happened after this very sharp drop here back in March. So now what is very exciting is that we have made a pullback similar to what we have seen back in March here, and again we are at the same level, 100 moving average. So based on this poor technical analysis and based on or with combination with Elliott wave principle, I think that this can be quite interesting to see what will happen down there. If we also take a look very quickly at silver, here also you have only 3 waves down so far. I know that we have retraced towards the 50% of the previous wave 3. So if we're now in wave 4, ideally you will always expect the 38.2% is going to be a support. But even this drop is valid, and even if we go a little bit deeper here, I would label this as a completed wave 5 up there, and you are now in an ABC setback of a higher degree. So no matter how I look at it, I think that we could look for potential lows here in upcoming weeks. Also, looking at the 4-hour chart, maybe we will bottom after 5 waves down in wave C. Okay, if we rally back above 25.77, I think that this could be a very nice indication that we are going much higher. Now let's take a look also on crude oil. Crude oil, in my opinion, has made a very nice and strong reversal here. We have 5 waves up, and now you are making a 3-wave setback. Now 3-wave setback could be seen even back towards $30 per barrel, or 34.60 could be the first support. So hold this whole zone here is going to be very interesting. I also want to see here an overlap with this 38.70 level, because that's where, if you would count this as a wave 1, here wave 2, you had seen wave 3, maybe now wave 4 that came close to invalidation level. So far it did not happen yet, but if we see an overlap here, well, then this would be confirmation that this is probably just an ABC sharp recovery. And also sometimes it's good to keep an eye on correlated markets. Now here's heating oil, and you can see that even here we have already seen an overlap. So this market does not suggest that we are going higher, but rather much lower here, especially once we broke these levels here from September 23rd. So if we see more weakness here, then definitely watch out for this wave C wave to be completed at a little bit lower prices. But longer term, I think that this could be very nice and important support for a new bounce here. Now let's take a look on the S&P 500 real quick here. Again, S&P 500 has moved to new all-time highs. If you are following me on Twitter, or if you were in one of our webinars in the near past, then you will know that we've been looking for potential top formation based on a 20 to 23 week cycles, and this cycle has actually completed up there. Now the question is how deep the pullback will be and what will be the structure of this pullback. Well, what I noticed is that market actually moved into some very interesting zone down here, okay, and this is significant because we moved into this zone with a wedge shape. So this could be actually referred as an ending diagonal of a free wave drop, and if we rally here in 5 waves, well, that clearly we will have to respect that this higher degree trend is still in the cards. If the recovery will be overlapping and will look corrective, then of course we will be looking for limited upside and will be turning actually bearish. But what I see right now is I think that we could rally back towards 3400 around there, and then market will decide if we break through or if we reverse from. Okay. Now also if we look at the DAX here, I'm observing a few different ideas. Now the first one is actually a new primary wave count that I just put together. It's ongoing impulse, and maybe you have here a triangle now making or forming in a wave 4, and you will see a rally into wave 5, or maybe here we are going to see a flat correction if pullback will be deeper. So both suggest that we are here in a corrective phase, and after all we haven't seen a push above these highs yet here back from the start of 2020. So I'm still willing to see this rise towards this level before I may say that this trend is accomplished. So looking at the 4-hour chart now, the primary, as I said, could be a triangle. In such case you should rally in 3 waves. If not, and you will see only limited upside and not any significant recovery towards 13,000, then this is going to be a flat correction maybe, and you will see only temporary rise for a wave 4, and then support will be down here, okay, at the previous wave A. So I think that still DAX is in a correction, but we just have to wait a little bit more on more price data to make sure where we are, what kind of a structure the market is forming, and when the correction will be finished. Now let's take a look also real quick on dollar Mexican peso. Now this one is important because we reverse from the highs here with 5 waves. You can clearly count here wave 1, 2, 3, 4 and wave 5, and you are now rallying here in 3 waves ABC. Now this is still wave A, so more upside is possible, but once we complete this ABC retracement, I think that there will be risk for another potential very strong drop, because this reverse in 5 waves confirms the fact that the market has made at least temporary top, and that ideally we are headed back towards this triangle pivot line here around 19.5 level, or maybe even fully back towards this wave 4 termination point after wave B to catch this wave C downside that can even belong to a higher degree wave 4 pullback. So dollar Mexican peso, I think could see more weakness, and this weakness could really kick in when crude oil will complete that ABC retracement that I was talking about earlier. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video, and I will again make sure to cover new updates in the near future. Bye.